All right. So today is just a little discussion on my thoughts on market structure. There are a lot of tutorials out there on market structure, and I'm not here to condemn any thoughts about market structure. I'm just here to make things simple for you to understand how market structure works and what I think about it. Alright, so this is gold. I think I may need to start from the daily time frame. Alright. What I'll normally say is, before, the first thing you need to identify in the market is the structure of the market. What direction is the market going to? What's the bias of the market? What's the sentiment? You understand? So basically we have three forms of market structure, which is normally the uptrend, higher highs and higher lows. Alright, yeah, and we have the downtrend, which is the lower highs and lower lows, basically, and the last is the ranging markets, which is equal highs, equal lows, market just moving in a range, not having a certain bias. So in a ranging market, you just stay clear from the market till you have breakouts, either to the upside or downside. And for the uptrend, you're looking for buys. For the downtrend, you're looking for sells. Alright, that's just basically it. No much grammar in this. Just basically knowing the direction of the market and then finding entries in that same direction. Nothing more. Alright, so finding the direction of the market is not pretty much a big deal. It's literally one of the simplest things to do in the market. I think where the challenge is finding the entry point in this market. You already know the market is going up, but where is the convenient area for you to enter this buy? Where is the convenient area for you to enter this sell? That's most likely the challenge of most traders. Now, you may want to enter here. Alright, so I'll show you that when you enter here, market is not going to come up and then liquidate you and continue the movement. You want to enter the sell here, I'll show you that market is not going to come, is not going to sell, then come liquidate you and then go. That is the aim of the game, for you not to be short. Alright, the market is always going to throw bullets, but the aim of the game is for you not to be short. Alright, so now you've identified the structure of the market. Is a buy, is a sell, yeah. Is going in a downtrend, is going in an uptrend, fine. Alright, so now find where you're supposed to enter the trade, which we all call the entry point. All right, let me clear this off. So like this is let me use example. This is gold. All right, okay, so this is gold daily time frame. Now gold has been on a bullish run till this change of direction started selling. Now normally this is most likely because it has formed a lower high. So most likely this is possibly going to be like sell bearish buyers because of this change of character, right? But yet it's not confirmed yet because gold, it has not formed like a lower low yet. So if it breaks, if it sells down on the daily time frame, down, breaking this structure here to the downside, and then coming to form a lower high, all right, then we may say we are up for a bullish run. So now let me not even go to the higher time frame. Let me move to lower time frame, probably 4 hours. All right, so you can see here this is a 4-hour time frame. Now right here, this is a clear bearish buyers. Okay, so now we already know this is a bearish buyers. The question is, how do we find the right entry to enter this trade, to be part of this trade? I don't know your strategy. I don't know. You could be using break and retest, support and resistance, moving average, ICT, SMC, fair value cap, order block, blah blah. I'm not here to like change your mindset about the strategy. I'm only here to make it simple for you, and in the way I should make it simple for you, I want you to answer some questions yourself. All right, we already know that the market is going to sell. Where is the right entry? If I had entered here, okay, fine, market sold from here. But what is the guarantee that market is not going to come and sell? Why take me out and continue in that direction? That is where the right entry strategy comes into play. All right, now this video is not just I'm not here to like say give you the direct. I'm going to do another video, yes, but this video I'm just going to leave you one key strategy. All right, with one key strategy that is going to help you find a good entry. Now we have a sell here. All right, we have a sell here. Obviously you know that market is going to go down. It is clear, everyone knows, no matter the manipulation, it's clear that market is going to sell because of the structure. All right, now how do we know that this is the right entry? For me, I believe this is for me. I've done back testing. Your free to your own opinion, but this is what has worked for me. This is what I've seen in the market over time, and this seemed to be like a prophecy fulfilled for me on the market. So when I see such structure, what makes an entry valid for me is, number one, is the market filled up? Number two, what are the other time frames? What are the other, I'm just going to leave it short form, time frames saying number three, what is the sentiment of the market? Right. So basically these three, I'm going to try to explain it, maybe not all in this video, but I'm going to try to explain it. Now, is the market filled up? I want to make it open to you that market is always moving in a way to balance itself. Market is always moving in a way to balance itself. Market is always trying to fill up gaps, fill up spaces, just like life. Market cannot leave itself vacuum. It's always trying to fill up spaces. This entry that I'm currently on, you can see what made me so sure of this trade is because all these gaps here have been filled. There's no gap here. The gap here has been filled. The gap here has been filled. There's no other gap. This is currently the structure that markets would have been targeting, and it has been filled. And being filled, market is satisfied and looking for another space to be filled, which is on the downside. Now, I know you say this other space, this other area, yeah, but based on this movement here, market has filled itself and must fulfill every other gap that is down here. All right, what are the other time frames saying? The daily time frame is saying bearish buyers. Nothing. I don't have anything buying in this market for today. The lower time frame, 1 hour. 1 hour is on a bearish momentum. 15 minutes is on a bearish momentum. They are all speaking the same language, which is making this make sense. What is the sentiment of the market now? When I'm talking of sentiments, I'm talking of what are people feeling, what is the emotions in the market, what are people thinking, the way I'm thinking, what else is another person like me somewhere around the world thinking. And how do we know that? We know that from the daily time frame. We see that gold is dropping. Gold is dropping. Now, this here tells me that there's something gold is looking for down. This is like a price action telling me that there's something that gold is looking for on the downside. Like I told you, market structure. The sentiment in the market now is sells. That means gold is no more a safe haven. Investors are moving their money from gold and they are putting it in other assets. And this is where fundamentals will come into play. You have to read news and all. Today is not a day for fundamental analysis. Probably in future videos I'll do that. But once you could understand these three things in the market, it will validate your entry and will make you more certain before you enter a trade. See you in the next video, and peace.